Hey, how's it going? It's John here. I do videos on investing and then also uh, videos and other things too, like travel, adventure travel, and then also I have done 700 plus short and medium term vacation rentals, and I'm coming out with some new material on that, kind of some services and programs related to it, and also going to be doing a whole lot more content on it. However, I've got an investing video today. Here we are. It is June 9th, and the markets are crashing again, unfortunately. But I wanted to do a video because I wanted to talk about somebody who I love. I'm actually reading a book about him right now, which is Warren Buffett. And recently, I did a video. It's not really the greatest quality video, but I did do a video a while ago about Warren Buffett and how I did a really fantastic experiment. And I highlighted one of my blueprints. So like one of the things I do is, I'm an online marketer, so I also drive traffic, and I'll sell, these blueprints, which are actually selling for like $7. Actually, one of them, the investment blueprint, I'm selling it for $1. And in the blueprint, I'll highlight it. So I'm going to take you into that now and tell you this wonderful experiment that Warren Buffett did, and we can all benefit from his experience, because the first time Warren Buffett ever bought a stock was in 1942, right? And anyway, so this experiment is about how he took a look at what happened with the S&P 500 from 1942 until 2018, and then compared that to gold. So it's a great, super duper experiment. But really, the spirit of what I'm talking about today is I'm going to be talking about three stocks. I saw a news article today how there's these three stocks that Warren Buffett is buying to actually give himself a $1.9 billion income stream to fight inflation. And these three stocks are awesome. One of them is actually Chevron. I'm not going to tell you who the other two are just right this second, but the other one of them is Chevron. I've had a position in Chevron for a long time, and when the growth stocks were killing it in 2020 and in 2021, Chevron was doing nothing, and now Chevron's been just actually absolutely kicking butt, this year, really since the end of 2020, 2021 until now, and certainly wish that I had done some repositioning and gotten some Chevron. But one thing that's amazing about Chevron is Chevron has got about a 4% dividend. In fact, when I did my research, it seemed that at the time the energy company that had the highest dividend was Chevron. So very, very high dividend. And that's, a big reason why, Warren Buffett is actually picking that up, because he gets the income stream from it, right? So real quick, what we'll do is we'll go in and I'm going to show you the article where these stocks that Warren Buffett is actually picking up. And then I'm going to talk about the experiment. So let's go ahead, the experiments. Let's go ahead and take a look real quick. All right, so here we go. We've got Warren Buffett is using these three top stocks to generate a fat inflation-fighting income stream of $1.9 billion. Follow along now for some healthy cash return. So there he is in his old cowboy hat, right? So what do we have? He's picking up U.S. Bancorp, symbol USB. He's picking up Coca-Cola. No surprise, right? That's no surprise. Warren Buffett has been. I think he started buying Coca-Cola. Actually, I don't want to say when he started buying. I know he started accumulating their shares in a massive degree in the 1980s. I imagine that he started buying Coca-Cola before the 1980s. But let's go ahead and take a look here. And he gets a healthy dividend from them. Buffett started hoarding shares of the beverage giant in the late 1980s. Today, Berkshire owns a whopping 400 million shares of the company. That is just shocking. Anyway, Coca-Cola went public 100 years ago. Berkshire now collects $704 million in dividends a year from Coca-Cola. Pretty amazing, right? And then the last company is Chevron. So if you take a look at Chevron, holding 159 million plus shares of Chevron, Berkshire now collects a staggering $904 million. So between Coca-Cola and Chevron, they're collecting basically $1.6 billion in dividend income from those two places. So cranking and killing it at 91 or whatever he is now, 91 or maybe even 92. I think he's 91. I definitely would never, personally, I would never bet against Warren Buffett. So what I'm going to do now is I'm going to take you into the little thing that I wrote up where it's the Warren Buffett experiment, where he takes the time frame that he bought his first stock, which was at the age of 11 years old in 1942, and then just considers what that would have been, let's say, the S&P 500, and then compares that to had he actually purchased gold instead, right? Because 1942 was before America went into World War II, but it was certainly the time of when World War II was going on. So let's take a look. All right, so yeah, so this is one of the things I do here. So like as I mentioned, I do online marketing, right? And this is actually a blueprint. This is the newest investing blueprint I put together, which I'll put a link in this video if you want to go check it out. I only charge $1 for it. There's reasons for that, but anyway, it's an investing blueprint I did. It's probably about 63 pages, and I talk about Warren Buffett in it. So I say Warren Buffett did us a huge favor. He did an amazing analysis back to when he bought his first stock in 1942 at 11 years old. The spirit of this analysis was to observe the performance of gold versus the S&P 500 from 1942 until 2018, or 76 years. If he panicked during 1942 and put all his assets, $114.75, in gold, it would have been worth only $4,200 in 2018. This return is less than 1% of the return that would have been realized from a single unmanaged investment in American business, otherwise known as the S&P 500. If we convert this figure from $114.75 into $10,000, these figures are revolutionary. $10,000 into the S&P 500 in 1942 would be worth $51 million in 2018, while $10,000 into gold in 1942 would be worth only $440,000 in 2018, less than 1% of the return of the S&P 500. So basically, you could go do the math if you want. I didn't really break down the math with a calculator and comparing them, but it's less than 1%. I mean, I think it's actually even less than 0.5%. Point. Anyway, I'm not gonna break out the calculator during this video, but I believe it's right there around around 0.5% of gold compared to the S&P 500. The reality is that S&P 500 index funds certainly didn't exist back in 1942. I don't even think they existed until the new millennium. I could go and check that, but I'm fairly certain that they didn't exist until the new millennium. Because back in the 90s, my first job out of college was Merrill Lynch, and that was back in the late 90s. That was all about mutual funds, and even Sun America was for me actually the early 2000s, and back then it was still all mutual funds. So the whole idea of ETFs, which is now much lower cost than mutual funds, is what a lot of folks are doing. They're doing the S&P 500 ETFs, index funds, and it's a great way to get lower fees than mutual funds. And as Warren Buffett has said for actually decades, you will beat literally 90% of the active money managers out there that actually run mutual funds by just doing a simple unmanaged investment in an S&P 500 index fund ETF. So anyway, everybody, those are Warren Buffett's 3 picks in there that he's buying to fight inflation, as we are dealing with inflation certainly, and growth stocks are certainly very tricky to decide to even get into, because they're just up and down. This whole kind of up 3% one day and down 4% the next day is really, really tough to manage, with any portfolio, right? So hopefully you guys like that. Let me know what your thoughts are on Warren Buffett. I know everybody's, I shouldn't say everybody, but I know a lot of people are very excited and interested in everything related to cryptocurrency and Bitcoin and all that, and Buffett is kind of against it. But, I don't really focus on that per se in terms of Bitcoin versus Buffett. It's more about just Buffett and what he does and how I wouldn't bet against him and in terms of the choices that he makes. Obviously, he's making choices all the time. He's buying new positions right now because of inflation, and he has to because of the amount of money that they are managing at all the time, right? But let me know what your comments are. I, again, would never bet against Buffett. I really like reading his material. I really like keeping up, with him and what Berkshire Hathaway is doing. Let me know what your comments are. Everybody, hopefully you like this. A little bit about me. I actually do have a professional background in investing. Like I said, first job out of college was Merrill Lynch. I did some investment banking after that, and then also worked for Sun America here in Los Angeles for 3 years. I've also been investing in stocks since 1989. Rode the whole kind of dot-com kind of boom and bust, and really have developed some strategies that have worked for me over the long term. I certainly have experienced some heavy shedding with respect to what's happened in 2022 in some of the growth tech that I have, but I still do have 5-10x investments to my track record, and one 100x, which was Netflix, which is now down 70% off of its 52-week high. So anyway, everybody, if you have any questions, put them in the comments area, and have a great day.